Good weekend, all. Ira Epstein with your financial market wrap-up, and this is your weekend edition, and we're on Sunday, the 24th of July, 2022. Interesting week. We get the Fed decision on Wednesday, and then on Thursday we get GDP numbers. So already people are saying, well, even if GDP is down again, you don't have the employment numbers going up, it's not a true recession. A lot of talk and writing this weekend. Will the Fed be able to slay the inflation dragon with not taking down the economy into a recession? I'm not convinced the word recession matters all that much. We're in a slowdown. Isn't that what a recession is, one way or the other? Academics, they can have a ball with what it is. The historians will come back and look at this down the road. But right now, I think that the smartest thing that we all do is just accept the fact that the market's slowing down. We get bounces from time to time in the stock market, and yes, we're down on Friday, but for the week we had a good rally, and you'll see that in a moment, where you came out of the downtrend into this rally phase that probably peaks out, in my opinion, at the 18-week average of closes or thereabouts. The dollar holding stable. Now in the pound, they're down to two choices. The question is, which one can do anything because their economy's in trouble? The biggest question to me is, are we going back to the 115 level in the pound? In the grain markets, while there was a treaty signed, already Russian warships have bombed Odessa. Now, the Russians claim, it was precision works. They did nothing to hurt the grain exports. They went after warships and battery areas where things are stored, if you will, for missiles and the likes against them. You'll never know what to believe, okay? Russia can bomb you and tell you at first it wasn't us, it was somebody else. Then when you can prove it with the tracking, you see it's Russian warships. This is how it's going to be, and it's going to be this way a long time. Rally in bonds and notes, okay. So the market's preparing itself for a 75 basis point hike. Not 100 seems to be the consensus. When we look at a monthly chart, so far, we're ending up, we only have this week left. We're up 4.63%. That's not bad. So you've had a reasonable bounce in the market. When you look at the weekly chart, you ended up almost 2.5% higher on the week. When you take a look at the bar chart action of this and you put the swing line on, you've got higher lows, higher highs. So you came out of this downtrend that began all the way up here and broke the pattern of when you finally took out 39.50 and kicked the market up. Okay. But you filter the swing line by looking where it's at in relation to key moving averages. In the moving averages, when the market is underneath the red line, the 18-week average, that determines bias on the swing line. So when the swing line is up, but the bias is down, you have nothing. You have a reaction in a market, but not a true trend change. In addition, the 18-week average in red got under the 100, so you have a bearish crossover in the market. When you look at where the Bollinger Band is, that's a potential target if the market breaks hard, back to the 35.90 level. And this time it's getting coupled with the 200-week average at 35.26. So that's your support area on the breaks as I see it. Momentum trying to turn up ever so slightly. Could get a couple of days of that. But I think once we get to the Fed meeting and hear what the Fed chair has to say, coupled right behind that with GDP, I think the tone of things doesn't improve. I think it worsens at that point. When you take a look at the Dow, same thing. Let's start with the momentum. Then the momentum is trying to turn up. The swing line is up, higher lows, higher highs, similar to the S&P. The 18-week average just crossed under the 100, and that's a very stiff resistance zone. In the NASDAQ, identical picture. Momentum trying to turn up finally. Higher lows, higher highs, right into the resistance. You got to 12,698, 12,749 is the resistance. So you're knocking right on the door of that. You had a bearish crossover a long time ago at the beginning of May, so you've been staying under that for a very long time. And in the Russell, the battleground to me, and I pointed this out to traders, seems to be the 200-week average up to the 18-week average, back and forth right in there. Yes, you got to the Bollinger Bands, but that's the first time you attacked the combination of the two. You slipped under it, and then you started hitting it regularly. So that's what I'm looking for. Is this all bullish? No. If you close over the 18-week average of closes on the weeklies, yes, that would change things a bit. So this is where I look for the markets to fail. on this rally. I don't think that's really what's going to happen. In the bonds, you've got the Bollinger top falling and the bottom rising. In addition, the market corrected, has made its move to the upside, getting itself ready for whatever the Fed's going to offer and how the markets want to react to curve yields. That's going to be the whole play this week. So while the trend and all is up, if you were to get a big rally, 147.20, the upper Bollinger Band is the key number there. My own instincts are this market's going to have a hard time going anywhere with that. From where you're at right now, that's 5 points. What would make it rally 5 points? I'm looking for a failure up in this general area. In the 10-year notes, the swing line is down, the bias is up. It's too difficult to make a call. Neutral in front of the Fed? Absolutely. In the dollar index, first challenge of the upper Bollinger Band, what normally happens? You pull back. Why? If you go back and you do your homework, you'll see this over and over. The first challenges give you bounce backs away. Why? Because so many traders realize and they build into their computer models that when you hit that number, you're only going to close over at 5% of the time. That's where they want to take money off. Then from there, you can build and something else happen, especially if momentum locks in with an embedded status. So things can change after it. But the first hit, high percentage, the traders come out of the market. Same thing in the eurocurrency. Yeah, you hit it, you can spin a little, but you get your bounces away. Have we seen dramatic changes in the overall trend? We have not. So I'm still looking for this market. People have asked me where I think it might go. Maybe 95, well under parity. So that's what I'm still looking for. The Canadian dollar, this one could be where the market finally wants to get back to the 78.19 area or thereabouts, the 18-week average of closes, and neutralize itself for a little bit as it goes and says, okay, let's see what the Fed's doing, what do we have to do, and how do things look at this point. In the Japanese yen, until you lose the embedded reading, these rallies, in my opinion, will continue to get sold. At some point, Japan will say, you know, we've had 3 months in a row where we're at our 2% inflation target. Maybe we sit back and we let the yen rise instead of this. They haven't done that yet. And when they keep looking, and I looked at their studies that the bank wrote, they said that the inflation is still energy related, not from domestic demand of goods, and that's not a figure that they're impressed with. In Bitcoin, all you've done is you're hanging at the 200-week average with an embedded reading. It is a market, in my opinion, that if you take out the 1880 area, you might go down to 14,000. So you're at a crux price. Now, if you can mount a rally from here, well, the next resistance is wherever that 18-week average is, and right now it's 31,000. The differential between Brent and WTI just keeps widening out, as you can see. We've been in a downtrend, both in the Brent and WTI, that have hit the lower Bollinger Bands for a support zone. So energy prices have been waning. Do I think that will last? I do not. I think it's a question of time as we get away from summer and moderate demand on energies that we get into the winter and all heck breaks loose as heating demand comes. I have already come out with the opinion, I was with some traders last night from big brokerage companies, I'm talking the monsters. And we came to the agreement that it would not be a surprise if we see that in Europe in a cold winter, they might have to turn and tell corporations, big companies, got to go to 4-day work weeks. That can't help the economies there. Why? The last thing you want to do is tell people, don't heat your home. You're going to shut down companies. Before then, we have not seen enough build for the natural gas and so on that has to be used. Now, I did say the word a cold winter. A mild winter changes everything. But you get a cold winter, you don't have the supplies in Europe to handle that, and you can't get them there in time. That is the biggest problem that we're seeing. In the gasoline market, I'm not looking for much more than the Bollinger Band. I think you're on borrowed time on this break. It has been the break that I was looking for. I thought on July 4th you had peaked out in the market. You have come down nicely ever since then in the demand. But now we got to start thinking the end of the summer and then just normal demand in the market. It is good, though, that Americans responded to the gasoline price by doing one thing: driving less. So you put it together, you got to come up with a game plan, and how do you do that? Well, let me tell you what we do over at Linn. We try to figure out for you ideas on the market, and we write about them all day long. We have our own staff of writers. And I'm not a writer. I do the videos, as you know, for a lot of things, but they're writing. And they're going to give you ideas by email, and you can choose which ones you want as to what we see. You can also view it in our charting software, so everything's in one spot, be it the energies, the financial markets, the grains, the interest rates. It's all here for you and covered in detail on futures, spreads, option strategies. So if you're a commodity trader and you're looking for news from people that write about commodities all the time, I use the word all the time. We write over the weekend as well. Tonight we'll be picking up the gauntlet, if you will, getting ready for all this. How do you get this? Go to our website. Under free offers, you can also at any point just take your cursor, move it up. You'll see an icon here. Give it a click. Once you give that click, what happens is you'll be taken right to the free offers area. Sign up for this and the other ones that we have. I'm Ira Epstein. I will see you all come Monday. Take care now.